weeks. While we're seeing Taiwan index that's down 0.3%, we're seeing Hang Seng that's trading with an uptick of around 0.5%.
Which had raised some red flags about Axis Bank's asset classification practices.
56,000 odd levels, 56,000, 56,030 or so.
Investec says that the JV with JNT will provide exposure to the largest EV market.
24,986, 24,970, opening up this morning.
Equity predictability is always low, not just on a one-year basis, but sometimes even on a 5-year basis.
The tariff uncertainties have also caused trade flows to get diverted.
Also decided to increase our secured book mix.
के राजनीतिक दलों से भी कहूंगा कि देश ने एकता की ताकत देखी है.
100-point uptick on the Nifty is what we are witnessing right now.
All of the indices in the green, and that is something to start the week off on a positive note.
Well, that is the day so far, and the last hour coming up here on the show. We are coming to you from the CNBC-TV18 News studios. I'm Prashant. With me, my colleagues Surabhi, Rima here in the studios. Nigel is joining us from the newsroom floor. Guys, good afternoon.
Hi, good afternoon, folks. And it's not looking bad at all, right? I mean, at one point in time, the Nifty had given up 24,900 as well. So it's a nice 150-point recovery from the lowest levels of the day. And we've got some green.
We have some green, definitely. Surabhi, before we take it any further, let me just quickly run our viewers through the top 5 or 6 names which are coming up here on the program. And then we'll sort of talk a little bit of markets before we get our guests in, right? So this is what you will hear about. We'll talk about CET. There is a downgrade, and we'll address that with Sudarshan in just a bit from now. Results came, I think, on Friday, but the cut is coming in today. The big move is coming today. Banking stocks are in focus after a slew of earnings over the weekend. HDFC, ICICI are up about 1.5% to 2.5% in that range, while the smaller financials like AU Small Finance Bank, L&T Finance are also reacting. So Gaurav will help us with that as we go along. Refiners, Nigel is putting the spotlight on MRPL and Chennai Petro, both in focus as global refining capacity tightens. I mean, is there a bit of a move here which could develop? Ultratech reported numbers about 30 minutes back, and we'll get some more details. They seem to be bang in line with consensus expectations. We'll have more on that. We, of course, also take a look at some earnings expected later. Eternal will report today. Ultratech is already out of the way, and I think we've got 1 or 2 more, but that's largely the stack up as far as earnings previews are concerned. So that's the lineup. Now, the market is barely holding above the previous low, which is 25,000. I mean, of course, we've broken that and we've sort of gone below it. The last low was 25,001. We are trading around there. I mean, is there absolute clarity that this is it and the market perhaps starts to do better and better? I think that we don't have yet. The other big talking point, which may one fine morning you'll come in and you'll have something about the India-US trade deal. So that very much is perhaps on the table as well as a interesting and important possibility if it were to happen, which is about 2 weeks to go to the 1st of August deadline. Otherwise, it's all about single stocks. It's all about specific earnings with some buzz, with some chatter, which we will cover with Nimesh in a bit from now. Prima.
Well, on the way up, it's the 2 banking heavyweights. So ICICI Bank, HDFC Bank are gaining. Eternal is your top Nifty gainer ahead of numbers. So that's up about 3.25%. So your top 3 Nifty gainers today, leading is Eternal, followed by an ICICI Bank and an HDFC Bank. So that's on the positive side. But on the flip side, what's counterbalancing this is the weakness in Reliance Industries. Reliance Industries had hit a fresh 52-week high earlier this month. On 9th of July, the high on Reliance Industries was 1,551. And from there, we've seen the stock correct close to about 8%. Well, the numbers were fine, but as analysts pointed out, in the last 3 months, the stock had gained close to about 20-25%. So a lot of optimism was built into the price, and therefore it's retracing a bit. So Reliance is weak, IT is on the back foot. You've got cuts in Wipro, HCL Tech, TCS, and then 2 of the FMCG giants, HUL and ITC, are in the red. Not by a whole lot, but it's a red tick.
That's right. We don't have too much of the large FMCG names supporting the screen today. And the other thing is that, yes, while there was a recovery from the early morning opening lows, the market has not been able to really push through or build on any kind of momentum in a meaningful way. Having said that, let's not forget there are still plenty of gainers out there. The mid-cap index is outperforming the large-cap screen. And we'll talk about that as we go forward. Stocks like L&T Finance, stocks like Hudson Agros. Many of these are actually result reactions. And look at Tilak Nagar Industries, up 10%. What a move for Monday, Nigel. Tilak Nagar.
Well, indeed, should be a big move out there. But, you know, the price action today is encouraging that we have recovered from the lows of the day, but the markets are not out of the woods. You'll get greater confidence if you can make a higher high. So if you can get, 100-point rally from here on before the time we wind up, 25,150 is the important level we'll be looking at. Let's see whether or not, for the time being, it's pretty okay on the Nifty. On the Nifty Bank, it's encouraging because it protected the 50 DMA. And as we speak, we're packed at around the 20 DMA as well. Let's get in Mitesh Thakkar back on the show. Mitesh, price action, well, was pretty okay on the Nifty. The Nifty Bank, though, that's encouraging. Comment on both these two?
I spoke about this in the morning that you kind of have managed to hold on to 24,900, bounce back from there. So maybe will not decline much. And the reason is Nifty Bank, as you rightly pointed out. The Bank Nifty has managed to bounce back very strongly with ICICI Bank and to a certain extent HDFC Bank, contributing on the upside. For the Nifty, the counters are same 24,900 and then 220 to about 25,250. But what could be interesting is the Bank Nifty. Bank Nifty, if it sustains about 56,700, 600 zones, then you might see some more upside to about 57,200 to about 57,250 zones. So I think there's mild upside left in the Bank Nifty, and ICICI Bank could be interesting over here. I, in fact, have that as a trading recommendation, just trying to get past the earlier highs of 1460 to 1465. So I would say if it starts closing about 1470 today, buy with a stop at about 1455, 54, and look for a 300 plus kind of a target over there to begin with. And that about, I think, the cement stocks have very well to me, and we had Dalmia Bharat earlier in the day. Ramco Cement has given a pullback, so Ramco Cement is something which I would want to have a look at. Try to buy with a stop below levels of 1135, look for targets of 1185.
Okay, ICICI Bank and Ramco Cement. All right, let's talk about SEAT. Mitesh, do stay on. Sudarshan is now joining in. So SEAT is under pressure because Nomura has downgraded the stock. So what is it that they didn't like? Sudarshan joins in with the details.
So ahead of its earnings on July 17th, company had given, the stock basically had given returns of almost 30% in last 3 months. But after the earnings, there has been a sharp fall in the stock, and now it's down almost 10% in last 2 sessions. So why, and if you talk about the earnings of Q1, so earnings were largely lower than expectations. Gross margin had seen a sharp decline. It was down 250 basis points year on year, and even down 70 basis points on a sequential basis. And that was mainly because an increase in input cost against management's expectation was of flat input cost on a sequential basis. Now, Nomura has come out with a note today. It has downgraded the stock to neutral from buy, and target price is cut to 3,906 from 3,945 per share. Now, what's the reasons behind the downgrade? First, Nomura believes that Camso value accretion may be lower than its expectations. Why it is so? Because it's saying that Camso was acquired with a revenue of $213 million in 2023. But with a sharp drop in the revenue, it believes that EV EBITDA of 10x might be expensive. Second, US has imposed tariff that would be effective August 1 on Sri Lanka, and the tariff rate is 30%. What it will do, it will delay the Camso's recovery. That will have an impact on SEAT's revenue. Second, input cost concerns. As I've told you that management was expecting that input cost might be largely flat on a sequential basis in Q1, but it has increased. Now, Nomura is saying that if recent rise in input costs sustains, it might have an impact on SEAT's earnings, and that's the reason it has decreased in EBITDA estimates by 9% for FY26 and 5% for FY27. Also, it has cut EPS estimates by 16% and 6% for FY26 and 27 respectively. As far as the valuations are concerned, it's currently trading at 7.8 times FY27 EV to EBITDA, and Nomura finds that it's a fair value, and that's the reason it has downgraded the stock.
Sud, thank you very much for that. So that is SEAT for you. Mitesh, technically, what's the price action telling you?
The last few weeks, tire stocks have gained, but today I think there is a negative breakdown on the charts of SEAT. It made a low of 3,500, closing low of 3,500 in June, 23rd of June. and then rallied from there and has come back to that level today. We got a low of 35.24. So this 3,500 is a good pivot for the stock, but if it breaks that and there's a chance of that on a closing basis, I think I would expect another 200 points on the downside.
Okay, that's CEAT definitely under pressure and cooling off very, very rapidly after a equally sharp build-up. 2,400 in March when all the tariff mayhem was playing out, just around that time. And since then rallied very sharply. Anyway, now let's talk about financials because that's been the other big headline of the day. And it's very clear if you're looking at stocks like HDFC Bank and ICICI Bank, that's where the numbers have been in line with estimates. That's where the buying is happening. And if you're looking at tier 2 financials, it's been not a very clear picture. It's muddled picture, one parameter up, other parameter down, and which is why the market is a little circumspect on names like AU Small Finance and RBL Bank. So tier 2 financials largely are under pressure. Let's bring in Gaurav to parse through all the major financial earnings and how the market has interpreted them. Gaurav.
Well, yes, when we talk about major financial earnings, let's talk about some stocks which are really creating an impact in the market today. First, let's talk about ICICI Bank. When it comes to numbers, growth has been higher than what the street is expecting. So, net interest income increased almost by 11% on a year-on-year basis. We saw PPOP, which is pre-provisional operating profit, growing at around 17%. And as a result, profitability also increased almost by 15% on a year-on-year basis. What remained as a key positive thing is that net interest margins actually declined only by 7 basis points versus the expectation of the decline of around 18 basis points. There was some change in the accounting practices, and as a result, management also suggested that the net interest margin fall has been in the range of 4 to 6 basis points only. Going ahead, they also said that the cost of funds will start easing and keep easing even in the quarters going ahead. So definitely a positive commentary which is also supporting the stock price. On the other hand, we saw stock like AU Small Finance Bank actually struggling in trade today, and the reason being that when it comes to the margin and the overall credit cost guidance, now AU Small Finance Bank has increased their credit cost guidance from 85 basis point to 100 basis point for the year. And the reason being that they said that the recovery in MFI is actually weak in this quarter specifically, and going ahead as well, they believe that the credit cost specifically in the MFI segment can go as high as 5%, which was earlier guided at 3 to 4%. Now, let's also not forget that management has said that in Q2 we will see the peak of MFI and the credit cost cycle. So definitely that is something which is relieving. But another factor to consider here is that the net interest margin fall was at around 40 basis points on a sequential basis. So that was also something which is hurting the sentiments of investors right now. Let's also not forget about L&T Finance. Now, this stock is also shining in trade today, we could say. And the reason being that when we look at the profitability, we actually saw a little bit of positive surprise in terms of profitability, and that was because of the lower provisions. So let's understand the numbers first. First of all, the loan book growth was actually strong at around 15% on a year-on-year basis. Specifically about the retail loan book, that increased at around 18%. So companies moving towards their retailization portfolio, which they had promised earlier. Other than that, when we talk about provisions, that have gone down, and as a result, profitability was actually up almost by 10% on a sequential basis. Now, they have used their provisions, the macro prudential provisions worth 300 crores. But other than that, the commentary also remained very positive. Net interest margins are again in line with what they had guided earlier. Credit cost is coming down at around 2.23%. Net stage 3 assets, they are also in line with what they had guided earlier. And as a result, we are seeing some positive sentimental impact in the stock price. As we speak, the stock is up more than 2%.
Thank you very much for that. Well explained. In fact, let's listen in to the management commentary of L&T Finance. Realization and loan growth remains a tailwind, for optimism, according to analysts. Here out Sudipta Roy, Managing Director and CEO at the company.
The objective of the management to be as prudent as possible and to use as little of that as possible. And I do believe that the guidance on the credit cost that we have given, I do believe that we will be able to test those marks without sort of support on any macroprudential provisions in Q4 of this year. Because by that time, I expect sort of the asset quality headwinds which had appeared in the microfinance segment and to a certain extent in the two-wheeler and the unsecured asset segments to completely dissipate by then. The gold loans business that we acquired from Paul Merchants, actually we'll be setting up about 150 to 175 branches in the remaining part of new branches in the remaining part of the year. So our gold loans business also will grow strongly. So overall, yes, we continue to guide toward that 20 to 25% AUM growth for the rest of the year. And in terms of ROAs, to probably by Q4, we should test near 2.8%. However, that remains also to see how the credit quality pans out, which are very hopeful right now.
Well, that's a couple of major earnings that have been in focus, especially on the financials front. We have Sudeep Bandyopadhyay joining in to take us through the next leg of trade. Sudeep, thanks for joining in. So, that'll be my first question. And I remember we've been discussing this for a while. The market's expectation was running far higher from tier 2 financials, that they will show the growth. There will be turnaround stories, whether it's RBL or AU, etc. But Q1 numbers, small hiccups here and there. Would you still be a buyer of tier 2 financials? If yes, which stocks?
Very selectively, Surbhi. I think, of course, the ICICI HDFC numbers were pretty good and NIM was better than expected. But when you look at the tier 2, I think the credit cost issue is still bothering most of them. And the unsecured lending book, which all these guys had, and unfortunately, the tier 2 banks had a higher proportion of unsecured book compared to the larger players as a proportion of their overall book. And the unsecured book is taking a hit. We know there are challenges there, and the challenges are not yet over. Whether they get over in the second quarter or third quarter, or the whole year continues with this kind of pressure is anybody's guess, and different opinions are around that. But having said that, I think some of the tier 2 financial institutions have also come up with good set of numbers. CSB, for that matter, is one bank where I did like the business update which they came up with, and I will carefully watch what kind of numbers and what kind of projections they come up with. Similarly, there are other some other City Union Bank, I think I do like. But as I'm saying, you have to be extremely selective in tier 2, tier 3 kind of banks and NBFCs.
Okay, all right. Sudeep, I wanted your view on refiners, MRPL as well as CPCL. I'll tell you why. Because refining capacity globally, well, it's in a bit of a short supply, which could probably throw up a refining opportunity just in the near term, in the next 2 quarters or so. And hence, the core refiners will be in focus, which I mentioned as MRPL and CPCL. But before we explain the thesis to you and what's going on, let's explain to you the risk first. It's a sunset sector. So re-rating may not happen, and GRMs, they're very volatile. So earnings projections as well are rather tricky. That said, MRPL results were weak, but that was because of 2 factors. Shutdown, which impacted the refinery throughput, which came down by close to 24%. And inventory losses as well, which were reported. That's what led to GRMs declining. The question is, can Chennai Petro do relatively better? Let's state a few reasons out. Because there's no major shutdown, right, for CPCL in Q1 FY26. So on the volume parameter, it'll do relative outperformance. Secondly, the GRMs, well, they'll be hit by inventory losses, like it was the case with MRPL. But there was no shutdown, which will cushion the hit, as CPCL has been focusing on the reduction in fuel and loss, which has come down from around 10.7% to around 8.5%. Now, analysts estimate that could be a few hundred crores that's been getting added on an annual basis. That's on the profit before tax parameter. So the operational efficiency is something that they've been looking at. Next up, the share of diesel in the refining mix for CPCL, it's at more than 50%. Remember, diesel cracks, well, they're higher than petrol cracks. So in that parameter as well, they're relatively cushioned. And on the valuation parameter, if you look at it, CPCL is trading at a discount to MRPL. And on the replacement cost basis as well, it's trading at a bit of a discount. So valuations give some comfort. And the other factors we need to track from here, if it's actually going to be so good for them, then the dividend payout will be important. Last couple of years, they've paid out close to 30-35% of in FY24 as well as FY25. And interest costs have come down sharply. Last year on an annual basis, it was around 245 crores. A few years ago, it was more than 410 crores. So sharp reduction in net debt as well we have seen. So I'll keep an eye out on both these two in case things are going to be so good. Debt reduction as well as dividend payout. So there is always a risk with regard to refiners because the GRMs are very, very volatile. But in the near term, the next couple of quarters, particularly Q2, could look up for both these two names. For the time being, MRPL's numbers are disappointing, but the street seems to have bought into the dip on CPCL. Sudeep, it's a tricky subject, GRMs. What's your view on on this space? Too tricky, or do you think as a tactical play you like to participate?
Well, I think, I'll tell you the basic thing which, foxes everybody is that the GRM and the volatility of the GRM. And Look, our view is that, if a unit has a capacity to process multiple grades of crude, I think that gives them much more flexibility in maintaining and enhancing the GRM vis-a-vis the standard GRM. So in case of, even in this case, between MRPL and Chennai Petro, I think Chennai Petro has a larger flexibility, with diesel being about 50% of what they're doing. They are in a better position, and I continue to maintain my view that the guys with a more flexibility will be the winners, will be better positioned. And of course, I do like Reliance because they have, to a great extent, that capability of using multiple grades of crude and processing the same. So they are always trying to better the GRM compared to the Singapore numbers which they come, and they almost always come up with better set of numbers. So yes, I can look at tactically some of these players, and definitely between the two, Chennai Petro does look better. Of course, on the valuation front as well, it does look interesting.
Okay, all right. So the refiners looking good.
Maybe there is a flash at the bottom of the screen.
Tilak Nagar Industries.
Yeah, okay. It's come off sharply.
The stock was roaring 10% when we started the show. And now this regulatory issue obviously is hitting hard, and this is coming in from the Informist alleged liquor scam. We'll of course be reaching out to the company. I'm sure our guest team has already done that, and we'll try and get you a response.
It's not a completely new story, Surabhi. The basic story essentially is that when the last government in the state was there, the allegation goes that the company, not just this company but others also, a bunch got gained unfavorably at the expense of others. That is the basic story under the last government. So this has been going on. I remember asking them on the air whether they've received something from the police or something from the government, etc. So, but this has now come out again. This is from the Informist. So we'll, that's the one. Police allege that the company paid some 200 crores, etc., etc. So we'll have to wait, and we'll come back on this particular story as we go along. I think it's still up 10%, right?
It just showed up 4.5%. Now it's up 10%.
I think it's
again. Maybe we'll do a tick by tick on this a little later.
Did it just move up?
Yeah, even I saw 10.5% when we started, then 4.5%. Now again about 10%. So I'll get more on this in just a bit.
But this is not, all I'm saying is it's not new.
Yeah,
not
this
a
has
shock.
been ongoing.
This has been ongoing, and this has been around for, the information has been around for a while. Yeah.
So there's a difference between the, I think, the rates we're getting on the different exchanges, NSE rate and BSE rate. And therefore, this is very large a variance between the two exchanges. We'll again go back and just do a technical check on this and come back. But in the meantime, Sudeep, otherwise, Alcobev as a space has been doing very well. And with a lot of these FTAs getting signed, there's just a lot going on. Look at a stock like Radico. It's just been such a huge wealth creator over the last several years, right? I don't know if you like Tilak Nagar. If yes, just give your overall sense on the company if you can. Any advice to investors who are looking out at the Alcobev space?
Definitely, it's a good space to be in. And with all these FTAs getting signed, there is definitely long-term benefit. Though I heard the Radico management on your channel sometime back when UK FTA was signed, they definitely were looking very positive. Their views were very positive. I'm not sure how to quantify the benefit at this stage till the T's are crossed and I's are dotted. But definitely they will benefit, and it's a good thing for this. So Radico Khaitan has been our favorite for quite some time, and we maintain our positive view there. Of course, the valuation is not cheap, and you have to, if you're buying now, you have to be prepared to be in the stock for a 1 year plus kind of time horizon. Some of the other names, including Tilak Nagar, also we have been examining. I think this Andhra, Telangana, there are too much of confusion and too many issues surrounding the entire liquor distribution. We know the government was holding on to payments, and some of the large players stopped supply in some of these states. So there was a lot of confusion. So companies having significant exposure in these southern states, we are generally a little careful. So I will rather go with a Radico than a Tilak Nagar.
Okay, by the way, just checking the proper rate. Now on both exchanges, what's reflecting is what you're seeing on your screen, which is about a 5% gain on Tilak Nagar. Got that. Thanks very much, Sudeep, for all the advice there. We do have to take a quick break on that note. Come back on the other side and we'll have Atul Mehra of Motilal Oswal AMC joining in with some thoughts.
Welcome back. The Nifty is holding 25,000. The sensex is above that 82,000 mark. It's a quietly positive session. Banks are leading from the front. But what else? What's happening in the mid and the small cap universe? Hormus joins in with the top buzzers at the moment.
Plenty of movers in the broader markets, most of them being earnings reactions. And we've spoken about the usual suspects, but the ones that are not. One of them being K-Solves India, and that is now down almost 13% in response to its results. The margins took a bit of a hit this time around. And the fall is interesting because this 13% fall was preceded by a 14% gain in the 3 sessions before today's drop. And the drop today also comes on the back of very significant volumes. That 25 lakh shares have been traded in the 3 prior sessions, and that comes on the back of a 20-day average of just 1 lakh shares. So it shows the kind of volumes with which the stock has dropped in today's session. The other one, and most of the earnings reactions today have been on the negative side, and Newgen Software is the other one that just keeps continuing to get pummeled after the earnings it reported last week, down another 5% today. Third day of losses now is down 15% in the last 3 sessions, was down 6% each on Thursday and on Friday as well. And volumes continue to remain on the heavier side for this stock as well. It is down 47% so far in 2025, which is the worst calendar year that it has had since its listing. And this is preceded by an almost 10x jump that the stock had seen over 2023 and 2024. So some bit of reversal coming in from higher levels. You take a look at some of the others on the positive side. Paradeep Phosphates is one of them. Slightly off the highs of the day, was up almost 10-11% at one point, but the stock though is gaining on very heavy volumes. And if you look at today's volumes, nearly 5 crore shares have already been traded, and that is compared to a 20-day average of just 22 lakh. So heavy volumes, a strong move for Paradeep Phosphates, and it is the 4th highest volumes in a session that this stock has had in its trading history. Some of the other earnings reactions, then Control Print is one of them, and that is the 5th day of losses. Another earnings reaction, 8% lower on the stock, and it fell almost 9% after its results. And the volumes, which until the result announcement were below their 20-day average, have seen a very sharp spike. 2.5 lakh shares already traded compared to a 20-day average of just 50,000. And lastly, Dodla Dairy is the other one. Hatson Agro doing very well at one point, and Dodla Dairy is the other one. 8.5% lower now at the lowest point of the day. 5.5 lakh shares already traded compared to a 20-day average of just 63,000. So some movers and shakers on the earnings front. This is the highest volumes that Dodla Dairy has seen in a month, but most of the reactions that have come in are on the negative side.
All right, Hormus, thank you very much for that. It's an interesting bunch of names that Hormus will get to you every day in terms of the movers and shakers that we don't typically discuss and talk about, but they're happening. Atul Mehra is with us, fund manager at Motilal Oswal Asset Management Company. Atul, good afternoon. Good to have you here with us. You know, if you think about it, and maybe you disagree, but I was just thinking that either you've got to be very short term, or you've got to be not very long term, but you've got to be long term. This in-between period has kind of disappeared. That I don't know. I mean, do you feel that way? Because things are priced quite finely. In the very near term, of course, things will move based on this or that, earnings or otherwise. Otherwise, things are kind of priced for FY27 and beyond. What's your sense, Atul?
Yeah, hi, Prashant. Hi, good afternoon. Yes, to some extent, I would agree. Yes, that given that, say, stocks are priced in terms of taking into account FY27 earnings and so on. So what you're actually seeing is reactions on either side, on the positive side or on the negative side. So So the delta in terms of surprises, either positive or negative, is what is getting reflected in terms of day-to-day prices. Otherwise, stocks broadly are just consolidating per se. So to that extent, yeah, it's right that stocks are going broadly nowhere, and only the surprises are getting in terms of priced on a day-to-day basis.
Atul, you look at the IPO space, lots of new listings recently. Anything that you purchased in your portfolio?
We've had a number of names added to our portfolio, and even this week, like we would have about 3 new IPOs open up. So there's a lot of activity in the primary market, just not just IPOs, even in QIP in terms of a lot of other deals, etc. So actually, if you look at it, what is really happening is the secondary markets are kind of consolidating in this very narrow range, and a lot of incremental activity is on the deal market side. And that is where I think most of the incremental attention, energy, money is going towards. So even last week, like for example, you saw a $3 billion QIP. You had a number of blocks in the last 1 or 2 months, $1 billion plus blocks. So what you're seeing is secondary markets broadly consolidating, and a lot of deals getting basically in terms of activated and dealt on a day-to-day basis.
Atul, with the disclosure, can you share where you've participated in a big way?
We would avoid any stock-specific name. But fair to assume that we have been active in a number of IPOs over the last 3 months, and even the pipeline in the next 3 to 6 months is a very large pipeline. Number of names that are lined up to hit the markets.
Interesting. Speaking of IPOs, today's listing has done so well. Anthem Biosciences stocks holding on to a gain of 28%. So yeah, I mean, there is a fair amount of interest for specific stories, specific companies, I suppose. Quite evident. Overall, by the way, just reiterating, the market is trying to make a bit of a move now. The Nifty is trying to inch towards the 25,100 mark. It has another half an hour left. Let's see if it can get there. It's the first meaningful move otherwise what's been a completely ranging session. So let's see if this takes us anywhere further up. Atul, hi. So, tell us what you've been doing largely in the last couple of weeks, 2-3 months. Since the market got into a range, the range is now almost a month old. I mean, what is the preference? Mid caps, large caps, in terms of sectors? How are you primed for the earnings season?
So I think in the last few months, it's primarily been a little bit more stock specific because the index has gone nowhere. And incrementally, what we've seen is in terms of names which are in terms of on the small and mid side, especially, they are having sharper moves in terms of appreciation. So incrementally at the margin, we've looked at more stock specific individual names, some of the newer names that we've added to the portfolio. And that is where I think the delta is. Broadly, if you look at it from a sectoral perspective, like we continue to, in the fund that I run, remain overweight on financials and telecom. Those have been the key overweight sectors. Other than that, there's been broadly most of the other sectors have been more or less in terms of aligned. Metals, we continue to remain underweight as a sector. So that is the sector positioning at this point in time.
Metals not finding favor with you, Atul. It's a tricky one, and maybe you'll believe that there is money to be made in other sectors. Let's talk about the banking space, because today you have the Nifty bank that's roaring away. It's up 700 points technically as well. It took support at 50 MA. It's crossed the 20 MA. That's great. But how are you positioning yourself on the banks? Because the larger banking names, they're doing extremely well today. While some of these mid-sized banks that actually, or smaller-sized banks that trade at a sharp valuation discount, they're getting pummeled actually. But their weight on the Nifty bank is so less that no one's really talking about it. What do you like? Do you go for the value names, or do you believe you rather stick to the large cap names?
Sure. So I think in terms of, if you look at the results that have come by so far, the large set of banks, large private banks especially, they have been very, very strong in terms of performance, and they've been beat in terms of NII as well as asset quality has been quite stable. What you're seeing in the mid-sized banks is some level of issue on the asset quality side, especially like we've seen in case of a lot of commercial vehicle exposures and so on. Those have been the ones where we've seen some level of asset quality in terms of negative surprise that is coming about, and which is what is getting reflected in some of the NBFCs as well as the small finance bank space. So So it is in that sense on the mid side, it's a little bit of a mixed bag on the asset quality side, which is why the stocks are perhaps reacting on the negative side. Large banks, they continue to remain very robust. And so far in terms of our positioning, portfolio positioning in the fund I run, so it's primarily towards the large banks and not too many of the mid financials. So some of the names we own are more on the HFC side, where we believe that with the interest rate cut that is perhaps further getting in terms of accentuated, you'll see that some of the HFCs which have a large fixed rate book, they tend to benefit disproportionately because your lending side is fixed while your liability gets repriced lower as you have in terms of the interest rate cycle playing about. So there we believe there could be some beneficiaries that could come about. But other than that, very, very selective on the mid financials.
Thank you, Atul, for joining in. He's also overweight telecom, and one of the stocks, Bharti Airtel, has now become India's third largest company by way of market capitalization. So today it's overtaken TCS. TCS, remember, post the numbers last week, has fallen close to about 6-7%, while Bharti Airtel continues to gain ground. So now this telecom company is overtaken TCS to become the third largest by way of market cap. We'll get into a break. On the other side, we'll get you a quick check on what dealing rooms are saying in our segment D Street Chatter. We'll also get you what to buy or sell today from our technical expert.
Well, the markets have seen a good recovery, actually, in the last few minutes. Eternal is one stock. I think Nirmal Bang had come out with a note, one of those brokerages that I read earlier today. And, that stock is now up 4.5%. It's been a gradual up move is what we're seeing on that particular name. But besides that, I think stocks like Grasim that were trading in the red, that's moved into the green, as is the case with the Adani Ports as well, putting on some weight in the last few minutes. And good to see the Nifty now hit a century. But it's time for D Street Chatter. Nimesh joins us to tell us what is he picking up in terms of the flows and how trade setup is. Nimesh?
Nigel, looks like this last 30-minute MOC is playing out. It was part of my graphics as well that in the last 30 minutes, I'm expecting a small MOC buy, especially in the Nifty name. So I guess that explains a bit of uptake in the large cap Nifty stocks in today's trade. But otherwise, in general, it's been a mixed day of trade. I think it's the earnings which is reacting across the street, whether it's bank stocks, whether it's the likes of Reliance as well. So today, banking stocks are leading the way, but even within that, it's a mixed day. Large private banks are doing good, but the smaller mid-cap banks have actually underperformed on the back of weak quarter one earnings. From a flow perspective, as I said, there is a small MOC buy in Nifty name, so that explains the last move in the Nifty in the last 30 minutes of trade. And in general, metals have done well today on the back of strong commodity prices globally. But net, I guess it's earnings which is impacting a lot of reactions and a lot of stocks as well. And that's going to be the trend, at least in the near term. We have Infosys day after, and that's a big bellwether to watch out for. So again, IT has seen some bit of pullback in today's market. But today, I think the big sector of the day is clearly the financials. And within that, large private bank stands out.
Okay, all right. But plenty of chatter. Nimesh, what are you picking up today?
Well, so the first stock on my list is UPL, United Phosphorus. That's been buzzing in trade. In fact, in the last couple of days, it has actually outperformed overall markets as well. And the flows have picked up from larger FIs is what I understand. But for UPL, apart from the earnings, the next big trigger would be a potential corporate development. Essentially, the buzz is that there could be restructuring of business within UPL going forward. So that's a big trigger there. The second stock is Reliance Industries. While the stock is reacting to a little bit of weak earnings, but there is a small MOC buy is what I understand at a leading FI desk today. So expect some bit of recovery in Reliance as well in the last 30 minutes. The third stock, a couple of stocks where there is delivery-based selling. Shriram Finance within the FNO stock and South Indian Bank. These are the two names which stands out in terms of delivery-based selling at an FI desk today. So expect high delivery volumes there. And the last is JSW Infra. A bit of accumulation has started is what I understand. So there are small buy flows. But I understand a domestic mutual fund has been aggressively accumulating at current levels in JSW Infra.
Okay, all right, got it. So plenty of action. Thanks for that. And indeed, we'll have to watch out for the delivery stats on Reliance as well, given the stock's been down over 3%. Thank you for that, Nimesh. Well, we've got Mitesh back with us, so let's get some final trading analysis. Yeah.
Sorry, Eternal numbers are flashing at the bottom of the screen.
25 crores of net
25
profit.
crores profit compared to 253 crores. That's the number. Revenues are up 71% as compared to 7,170 crores. So top line is a very large jump. Bottom line, year on year, I mean, basically it's about 10% of what they did the same quarter last year. Stocks starting to come off a little bit. There were no, I mean, we didn't put out a poll. I think there was only one or two sort of brokers who listed their expectations for the quarter. And Mangalam should be with us in a bit from now to talk to us about what these numbers look like. And I mean, the sort of the presentation is detailed from Zomato, both in terms of the segments that they operate in, and that is looked at very, very closely. So we'll try and have that for you. But for now, we have the basic profit and top line number, which is flashing at the bottom of the screen. So 266 on Zomato at this point in time. Mitesh is with us while we wait for Mangalam to come in. Mitesh, what do you have?
In fact, UPL and Paytm, UPL features on my list as well, making a fresh swing high, finally, getting past 695, 705 kind of a zone. BTST here with the 708 stop and 725 target, and Paytm is the other one. Paytm is a BTST with a stop at 1,005 for targets of 1,035.
Okay, all right, got that. Thanks very much. While we are waiting to do the fundamental check on Zomato, Mitesh, just very quickly, levels to watch for Eternal, 265 now?
See, this stock has kind of, come back from a corrective movement. And the recent highs were around these levels. This 271 was the closing which we got on the 14th of July. And if you look at the retracement levels on the long-term charts as well, they are near these levels. But the chart structure is improving. So I would, want to see if we can get it on a mild decline, or if the breakout happens at a much higher volume, then you would tomorrow maybe want to initiate some kind of a long position.
Okay, let's go across to Mangalam. Mitesh, thanks very much for that. Mangalam, tell us more. Zomato.
For Zomato, a couple of things. Revenue growth at 70% is higher than what the street was expecting, anywhere between 55 to 60%. But that is led by, no surprises, Blinkit. In the quick commerce business, the revenue has actually grown by about 154%. But remember, this is something that the street was anticipating already because of the upfront investments that they had done. So revenue growth wasn't a concern for Blinkit. The question was, what happens to the operational performance? And out here, Blinkit EBITDA loss has come in at 42 crores. This versus a gain of 43 crores the same time last year. So there's a near 80 crores swing which has taken place. But despite that, the stock is holding in the green because this loss has narrowed from 82 crores in the fourth quarter to a loss of 43 crores in the first quarter of this year. So that's a positive. The second part is that, the food delivery business, which had been seeing a declining growth trend in the last quarter, had grown at around 16%. This quarter, the food business has grown. The delivery revenue has grown 16.4%, which tells you that, it may have perhaps bottomed out at the pace of growth level, which explains why the stock is holding with a gain of about 4%. So now we need to watch out for a couple of things. How the food business margins have done. There has been a slight contraction quarter on quarter on the food delivery margins, but the fact that revenues continue to stay stable at around that 16.5% doesn't have the street very worried about. So all said and done, these are decent numbers coming in from Eternal. Why is that? Because on the one hand, quick commerce, the revenue growth has come in at 154%, which is higher than the street anticipation. The EBITDA has turned into a loss versus last year, but sequentially there has been a reduction in the loss, which is also a step in the right direction. The food delivery business, which was showing signs of slowing growth, has stabilized at around 16.4% in terms of revenue growth, notwithstanding the mild compression in the margins. And the stock has already seen a correction from the top. So as a result of which, it's holding with a gain of about 4.3%. More details when the shareholders letter is uploaded to the exchanges.
Okay, all right, Mangalam, thanks very much for that. So that is the first look as far as Eternal, that is Zomato, is concerned. Stocks actually moved up and sort of even sharply 5% now, about 2.5%, 3% when the numbers came out, almost about 270 odd rupees on Zomato. We'll get you more from that letter as Mangalam was talking about as we go along. But let's move on. IndusInd Bank, we've been talking about, Ritu's been, of course, telling us this big story on Axis Bank that she broke. But IndusInd was also in focus because the bank, in a response to CNBC-TV18, has denied reports of expanding sort of its CEO search. Ritu's here with some backdrop and what we're being told by the regulator. Ritu, take it away.
IndusInd Bank, in a statement to CNBC-TV18, has firmly denied any reports of the Reserve Bank of India asking its board to expand the CEO search. For context, certain reports had indicated that the RBI had suggested the board look at new CEO names, including public sector bankers or Indian origin bankers working in foreign banks, and even went on to suggest that RBI's directions followed some concerns or hesitation on the part of the shortlisted candidates to take up the assignment. However, now IndusInd Bank has dismissed these developments entirely. In its statement to us, it has called these reports false and speculative, and also said that the appointment of a new MD and CEO, including seeking relevant approvals, is in process. Remember, CNBC-TV18 was the first to report the 3 shortlisted CEO candidates for the top job at IndusInd, including Rajiv Anand of Axis Bank, who is the front-runner, Anup Saha of Bajaj Finance, and Rahul Shukla of HDFC Bank. We had also earlier reported that RBI could expedite the CEO appointment, which would typically take 6 to 8 weeks or longer in other cases, given the gravity of the situation at IndusInd Bank, which is currently without a CEO, with an executive committee running the bank's day-to-day operations. So in summary, IndusInd Bank making it clear that the CEO appointment process remains very much on track.
Thank you very much for that. Anand Tandon is now joining in. And by the way, markets are picking up now. So it's moved up about 50 odd points in the last 30 minutes or so. So now inching closer to the 25,100 mark, and it's gained more than 100 odd points. Anand Tandon is now joining in for the last leg of the show. Anand, first a quick word on Eternal's numbers. I don't know if you had a chance to listen in to Mangalam's first take.
Well, I did listen in, and as you said, the numbers for Blinkit, what you're looking for is simply the top line growth, and the fact that they have managed to reduce their losses over the last quarter is a positive, which means that at least the unit level profitability exists. So as you continue to grow, hopefully there will come a time when you'll start to make money. Overall, the level of intensity of the fight in that sector has actually increased because the other players are also putting in their best. So it will take a little while before you would expect to see stable numbers. But overall, I would not be too worried about what these numbers are. In fact, they are, I would imagine, relatively positive.
Would you buy? Do you own Eternal in your portfolio?
Well, it would be in one of the portfolios which are managed by others. I also have PMS investments, but it's not my own personal choice.
No, absolutely. 6.5%, 7% on Eternal. I mean, that is a big move, which is coming through. And all of it, mostly all of it has basically come through after the results have been announced. I think you've got to say something about lack of positioning as well, right? I mean, the stock actually did correct from about 278 to about 256 in the last 4-5 days. So there is that as well. So going into the results, the stock was weak by about 30 odd rupees or so. So that's coming up very, very sharply, very, very quickly. So almost 20 rupees now after the numbers have come through on Eternal. Let's just look at Swiggy as well as the other one, right? I mean,
it's moving up.
Yeah, it's moved up. It's moved up a little bit, not much. So from about 389, it's moved up to about 395. So about $6 on Swiggy after Zomato has reported numbers. Anand, good afternoon. Good to have you with us here as always. The banks, and I don't know if you heard Ritu on IndusInd, she of course broke that story on Axis as well, that RBI basically forced Axis's hand to recognize all that. I mean, the regulator thought that they were being lenient in terms of NPA stress recognition, and that is what led Axis to disclose all that stress. Your thoughts? I mean, troubled financials, if I can sort of put that in a category. There are a few others as well.
Well, I think, the larger banks are doing kind of okay, right? Clearly, we are still in a stage where credit growth is nothing great. And more importantly, I think people are not recognizing the fact that the Indian consumer today is a heavily leveraged consumer. If you just even take out the housing loans, the rest of the unsecured credit to Indian households is probably the highest it has ever been. And on a relative basis is actually as much as many of the developed markets are. So there is not that much place to go, which is why I had mentioned even in the last conversation we had that you will see a lot of growth in the Ninja loans, but you will also see NPAs coming through, and that is what you are going to see now in the smaller banks. Some of that has already happened. I think it can only deteriorate from here. So if you are looking at financials, clearly the most conservative ones are the ones that one should be looking for. Already the growth has to be factored down. That said, the profitability will still remain quite good for some of these banks, especially the bigger, larger ones, which are able to have a deep deposit franchise. And there is no particular reason to migrate to the others. If you are looking for growth, look for NBFCs. Remember, they are lending to ninjas.
Okay. By the way, I just want to make one point on Eternal. I mean, a lot of the comparisons that we are flashing are year on year. Perhaps another way of looking at it, and that's how the market is looking at it as well, is quarter on quarter. Because remember, year on year, Eternal had flagged off that there will be some burn in the quick commerce business. Now, quarter on quarter, that burn is definitely coming down. Look at the quick commerce losses from 82 crores. The losses come down to 42 crores. The going out business loss is steady, but it hasn't increased too much. From 44 crores, it's 48 crores. Overall, of course, the food delivery business, there the profits keep rising. 439 crores has become 465 crores. So sequentially, this performance is looking really good, and the market is taking note of it for sure. So Eternal looking very, very good. Big nifty move up, the biggest actually nifty gainer this afternoon. Well, let's quickly head back to that story on Tilaknagar Industries as well. We just saw that news flash about regulatory issues and allegations of a scam in Andhra Pradesh. We have Shilpa joining in with the latest. Shilpa, fill us in.
Well, the Andhra Pradesh police has now called out Tilaknagar Industries in the larger liquor scam that is under investigation. Now, the state police has named the company, and which is a big name in the alcohol industry, as one of the companies that is involved in an alleged 218 crore kickback when it comes to this particular company. Now, what the charge sheet says, as per the details that we've seen, is that between 2019 and 2024, Tilaknagar Industries was one of the biggest liquor suppliers to the state, which is Andhra Pradesh State Beverages Corporation Limited, or the SBCL. Now, it was pushing its top-selling liquor brands like Mansion House, Brandy, and also Cooper Napoleon. Now, the investigators say that 1,472 crore in revenue is what the company earned from the SBCL, and an estimated 218 crores was siphoned off as kickbacks. Now, this was actually routed to a liquor syndicate that allegedly controlled the state's liquor procurement sales. This is as per the larger investigation. Now, the police claims that these kickbacks weren't paid directly, but they were laundered through gold. Now, sums were transferred to jewelry businesses like Sri Jewelers, Uday Jewelers, Uday Jeweler Industries, Sona Chandi Jewelers, Mangathrai Pearls, and these were amounts of about 3-4 crores each. And in return, gold was allegedly handed over to the syndicate handlers, helping the company convert that into white and bank money into untraceable assets. Now, with the alleged GST invoice also is something that they had to show for it. Now, according to the police, this wasn't just corruption. They have said that there was coercion also involved as per the charge sheet, and that the syndicate allegedly held such tight control, and even large legacy brands like Tilaknagar Industries were forced to play along. That is the allegations that have been given in the charge sheet, and this was to be able to just retain a market share in the state. Now, let me give you a little bit of the larger context. This is part of a larger liquor scam that has come to light. Now, this was come to light in the state based on a complaint by a man named Yedi Venkateshwar Rao Srinivas. Now, his complaint led to a 5-member SBCL committee, which then submitted a report which found that during the YSR Congress Party's rule, some popular liquor brands were unfairly sidelined, while certain players dominated supply orders. Now, based on this, the Principal Secretary for Revenue, Mukesh Kumar Meena, filed a formal CID complaint in September 2024. Now, this scam is being pegged at about 3,200 crore, with the alleged mastermind being identified as K.C. Reddy Rajshekhar Reddy, who was the former IT advisor to the then Chief Minister Y.S. Jagan Mohan Reddy. Now, Tilaknagar Industries has not yet responded to the allegations, but CNBC-TV18 has reached out. Back to you.
Okay, well, that is a lot of information, but there is important context to what we are seeing now, which news which flashed on our screens right now. We'll wait for a comment from the company itself. Shilpa, thank you very much for that. I think Anand may have some views on this, and I'd like to go across to him, but I'm being told we have to take a break here, so let's do that. We are back. There's 5 minutes to close.
Welcome back. 1 minute to go. Less than that. The Nifty is ending at the 25,100 mark. So picking up a little bit towards the end. Anand, any stock, since we have less time, so I want to leave it to you. Anything that you'd like to talk about, any new opportunity that you've spotted?
Well, I guess you continue to remain bullish with financials, and especially, insurance is the area that I would prefer among them.
Okay, thank you. We'll continue our conversation after the break. For now, it's counting down. The Nifty is ending closer to 25,100, 128 points higher. A significant recovery from the day's low. Benchmark indices ending up with a gain of about 0.5%. Banks provided a lot of support. The Nifty banking index higher by nearly 650 points, with ICICI Bank, HDFC Bank up more than 2%. Eternal was the star. The street likes the improvement on a quarter-on-quarter basis, 7.5% on that. HDFC Life, M&M, Shriram Finance, BEL were some of the Nifty movers with a gain of more than 1.5%. On the way down, Reliance was the top drag, closed below the 50-day moving average, 3.25% down. IT names weak. Wipro, IndusInd Bank, Eicher Motors, HCL Tech were some of the other notable losers.
Absolutely. And if you look at the results screen today, it's a mixed bag. So on the gaining side, you have names like Mastech, something like Aarti Drugs, Hatsun Agro. These stocks fared well on the earnings calendar. Even Ultratech Cement, by the end of it, 0.5% gain coming in over there. On the flip side, AU Small Finance Bank, Union Bank, Bandhan Bank, RBL Bank, not a great day for Tier 2 financials. Many of the earnings, the market is choosing to look at the glass half empty side of it rather than the half full. So that's how it's played out. Mid-cap index outperforming the Nifty on day one of the week. The Nifty itself not too bad, getting closer back towards the 25,100 mark. Well, with that, we'll take your leave on this closing bell. Many thanks for watching, but don't go anywhere because we have Markets Forward taking the action ahead.